In this video, I'm going to show you exactly how you can get a hard money loan for your next real estate investment project, no matter your situation. First, let's talk about what a hard money loan and a hard money lender is, as well as diving into hard money lenders and how they underwrite loans. Even if you don't have a perfect credit or all that much cash of your own, it's still possible that you can get a hard money loan for a real estate investment project. So what is a hard money loan and what is a hard money lender? So a hard money lender, very similar to a private lender, an individual or a small company that is lending private capital for you for a real estate investment project. It could be a fix and flip project, like you're fix and flipping a house. You could be buying a rental property, or you could be buying a commercial property. Typically, hard money lenders don't work with homeowners that are buying primary residence, just investors. The difference between a hard money lender and a private lender is a private lender is just somebody who's one-off, and they might just be, hey, I know this person and they're looking to borrow $100,000 and that person just lends them and they have kind of a one-off situation. A hard money lender is someone who's a little bit more formal and works with lots of different borrowers, and they're lending out larger sums of capital, either their own or other private capital investors that in essence go through them to lend out their money. So very similar situation, but it's all private funds. Now, typically hard money lenders are localized, right? They're in your local market, local cities. You're meeting them at real estate investment groups. A lot of hard money lenders, are marketing online as well. But usually, let's say like I'm in the state of Maryland, you probably don't want to go to like California to have a lender lend you money. You want somebody that's local, somebody that understands the local real estate market and the knowledge. Maybe you can meet the lender. Maybe you talk to them on the phone. Maybe you do a Zoom call. But it is usually a company that is localized and knows the local real estate market. That's very, very important when you're working with a lender, a private lender, a hard money lender. And again, they're lending money on investment residential properties for a fix and flip or a buy and hold or a commercial transaction. And the term hard money, easy money, not hard money, because it's a heck of a lot more flexible than a bank or something. But the word hard comes from a hard asset. And real estate is a hard asset. And the hard money lender, in essence, is the bank. They're the mortgage company. You're giving them a lien against that property. So if you buy a house to fix and flip, and let's say you buy it for $100,000 and they give you an $80,000 loan, they're going to put a first mortgage on that property. Hard money lenders, the interest rates typically aren't all that much higher than a bank could be anyways. Usually they're 12, 13-ish% with maybe a few points. A point is a percentage of the loan amount as a fee. So if it's 1 point on $100,000, typically that would cost $1,000 in a loan fee. Usually the going rate's about a 13% interest rate and 3 points, give or take, depending on your project. Typically, hard money lenders, including my company, Hard Money Bankers, we use what's called like the 4 C's of underwriting. So let's go through those: collateral, character, capacity, and credit. And we utilize those in that order. So collateral being the property itself. Are you buying a good deal? Is it a good property? Most of the times, you're probably buying some sort of like fix and flip property. And when I say good property, that doesn't mean it has to be in good condition. Most properties real estate investors buy are not in good condition, right? You're buying a property that's dilapidated and run down, and that's where the opportunity is for you to come in and find and buy a good deal, because you can renovate it and increase the value and sell it for a good property. And number 2, is it like in a neighborhood that's easy to determine value, or in a city with lots of different and local comparables? A hard property to buy sometimes is like a unique property. You ever been driving on like a highway and you see like one random house on the middle of that street, in the middle of that highway? Like, that's a hard property to determine what the real value is. Now, if you're driving around your residential neighborhood in the suburbs, all the houses look alike, that's an easy property to identify and an easy property to determine what the value would be on that. Number 2, in order to get a hard money loan, is typically characteristics. Hard money lenders are going to look at the characteristics of the borrowers to make sure that they can execute, and do they communicate with. I mean, I can tell you from experience that you're the type of person that doesn't return phone calls or text message. The hard money lender is going to be like, hey, I'm trying to lend this guy or girl money. I can't get in touch with them now. How the heck am I getting in touch with them if they actually owe me money in the future? And chances are they might not approve you for the loan, if that's the case. So it's good to have, good characteristics and, make sure, your hard money lender, just like your bank or your joint venture partner, like they're partners on a deal. They want you to succeed. They want to get their money back, and they want you to make a profit on your real estate transaction. Number 3, capacity. Do they require a down payment? Do they require monthly payments? Do you have the ability to execute on the project? If you're a first-time real estate flipper, you probably don't want to do like a new construction project or $100,000+ renovation budget. Like, that's a hard project to execute on. You want to do something maybe a little bit smaller of renovations, something that's a little bit more achievable or easy to accomplish. So those are all things that are looking into. Most hard money lenders do require borrowers to have what's called skin in the game, like cash in the game, typically like 20% down, give or take. But there's other creative ways to do that. Sometimes you can get seller financing to cover down payment money. You could get like gap lenders. Lots of times there's partnerships where, hey, you're doing the loan and you bring in like a cash partner and they're putting up some of the capital, and then you're getting a hard money lender to do the rest. So don't get discouraged if you don't have enough cash to do a particular deal, because you can always get creative to try to find other partners to do a deal with. Making some money is better than making no money on that deal. I think a lot of people get discouraged because it's like, 13% interest rate, I'm not paying that. That's ridiculous. Let's break down what a 13% interest rate even equals. So let's say you borrow $100,000 from a lender and they charge you a 13% interest rate. You only need the money for 6 months. That means you're only spending 6.5%, right? So that's $6,500 for every $100,000 that you're borrowing. So, when you break it down, and time is money as a real estate investor. If you get in and out of these projects quickly, you save a lot of money, and it doesn't cost you nearly as much money as you think. The last thing they look at is credit. Obviously credit isn't everything, but it does tell a picture of credit habits and credit history. Borrower who's borrowing money from a bank or hard money lender or private lender, if they're not paying other bills, they're probably not going to pay their hard money lender either. So it's important for a hard money lender to check credit history to see. Now, keep in mind, maybe you do have challenged credit. That doesn't mean that you can't get a loan whatsoever. Just like maybe lack of cash, you figure out a way to get creative. Maybe you partner with a credit partner. Maybe you talk to your lender and say, hey, listen, my credit's lower, but I have, I just sold another property and I've got, a good amount of cash I can put in. If I come in with more cash but lower credit, can you still give me a deal? And chances are, yes, that'll work. I know internally at our company, Hard Money Bankers, we do that all the time. If the particular borrower has good credit, it's 20% down. And if they have bad credit, it's more down. But we can still do it, right? There's, it's not like there's hard and fast requirements. So these are all things to look for, when you're trying to apply or get a hard money loan from a private lender. The hard money lender should be fast, they should be local, and they should be flexible. When I mean fast, like real fast. There's deals that we'll close in one day if we need to. Obviously, we have to do our due diligence with we can race through. We got to get title work done, but as long as title work is done, we can do that quickly. And that's why a hard money lender should be local. And again, they should be fast and they should be flexible. Most hard money lenders don't need tax returns and a lot of other, detailed financials and things like that. These are collateral-based loans. But again, what we talked about with the 4 C's, the collateral, the character, the capacity, the credit, they all take into consideration and they all paint a picture. So if you've never used a hard money lender before, I encourage you to reach out, Google hard money lenders, online. If you're local to Maryland, Virginia, DC, Pennsylvania, New Jersey, and Delaware, my main office is in Maryland, but we have a few offices in those other areas as well. And, I have local partners that know those areas really, really well. And that's why we're able to lend in those areas, because we feel like we're experts in those areas and we've done thousands of loans. So in those areas, I'm local. I'm in Maryland. I don't lend in California. I lend in areas that I know. My business partners live and only lend in those areas that they know close to where we are. So if you're not in this local area and you need a hard money lender, Google one. Just make sure you ask the questions. Make sure they're local. Make sure they're fast. Make sure they're flexible. They should be your partner. They don't want you to default on this deal. They want to help you with this deal. It should be a win-win for everybody. I hope you guys enjoyed this video. If you did, and you can give me a solid by just smashing that like button, that'd be super appreciative. And even better, maybe even smash that subscribe button. I put videos out like this on a regular basis, and I certainly appreciate your support. And if you know anyone else that's looking for a hard money loan or hard money lender, just reach out to Hard Money Bankers. We're all over the internet, hashtag Hard Money Bankers on all social channels. And I appreciate you watching this video. Until next time, any questions related to this topic, comment below and I'll personally answer it. Thanks, guys.